I guess all the read order, so the pledge of allegiance, please.
Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Roll call, I think,
Eric and Sue are virtual. I don't know. Is Eric?
Sue is on.
Yeah, is Eric?
Hey guys,
You are, oh, okay, and there's, nobody,
All right, so Eric is probably on his
okay,
way.
and
We'll see.
nobody, no public right now. And Mark is, I think.
Mark, I'm told, is in Brazil, but I
know, right?
Yeah.
Wow,
Well, that's-
sure that's what you
Well,
told me.
yeah, the middle of the night right now, that. It's not coming.
Yeah, I got it from my place.
So I guess it's not, it's like 12:30 at night and we have a forum. So
Thank you
we're
very
good.
much. Next item, are the minutes from July 28th, which Jerry, we sent out, thank you, Jerry, I need a motion to approve the minutes.
Motion approved.
Thank you. And second, Steve, all in favor, please say aye.
Aye.
Public name, thank you very much. Public comments? You guys will talk for a minute, so, we'll do it right now, actually, so, there are me. Good.
Thank you so much for giving us time at the meeting tonight. So I'm Kevin Nichols. I'm a senior institution consultant and government specialist with Morgan Stanley Institution Consultant Services. We've been working with the town, our team, for the last 35 to 40 years. We come to the pension benefits board meeting every single month, and we're here just to talk about the management of the pension funds, how well the pension funds are doing, and answer any questions. All right, does everyone have a copy of the presentation here? All right, we'll start on page 4. So the net of it is that we want to manage the pension in very risk managed way, right? So we're looking at high quality investments, things that have stable cash flows and growing cash flows to help manage the benefit payments, and trying to target the assumed rate of return of 6.75% with as little risk as possible. Okay. We really want to manage the pension funds in conjunction with a few things. One, the liability payments that are going out. Okay, we have to pay those liability payments whether the market's good, bad, or ugly. And then the contributions that are coming in from the town. Right. So how do we provide predictability and reliability for the town budget for the determined contribution that the actuary tells that you have to put into the pension every single year? And the way that we do that again is minimizing volatility of the portfolio, so that from year to year you're not getting an ADEC that is, much higher than the prior year, right?
You said ADEC, assuming everybody knows.
Sorry, actuarial determined employer contribution. All right, just the town's contribution into the plan. And so we work, in conjunction with the actuary to make sure that their assumptions are reasonable. Have a kind of a schedule for the cash flows that are coming in and out of the plan over the next basically 10 to 15 years. And we report this to the board on an annual basis, in addition to doing the investment policy statement review, asset allocation study, and then obviously providing all the performance reports. But one thing that is very different about the town of Old Saybrook's pension plan is a spending portfolio. Okay, so this isn't a pension plan that we're looking to accumulate and grow as big as we can and take as much risk as we can, because there are liabilities that have to be paid out of this portfolio every single year, right? The liabilities about 10 years ago, somewhere around 1.25 million. Now they're just over 2 million. They'll be over 2.5 million basically in 2032, 2033. Okay, and that's because the plan is, partially closed. Basically the police are the only ones in the plan right now. That means that the employee contributions are also going to be decreasing. Okay, so we're dealing with that as well. So cash flow coming into the plan is actually decreasing, payments going into the plan are increasing, right? So you can kind of see this on page 5, bottom of page 5. Really like this chart. The blue line is the market value of the assets in the plan, right? The dark blue line or black line on the very bottom is the net contributions minus withdrawals. So that's basically if you put the money under the mattress, what would happen to the plan? Well, we'd have, $3.5 million as opposed to, $33 million, right? Page 6. Top left, or just the top of the page. We look at the, last fiscal year, where we were at just under $32 million. Total contributions was planned about 830, a normal cost of 331,000, administrative expenses of 25, and benefit payments about 2.3 million. So net cash flow, $1.5 million coming out of the plan, last year, which is just under 5%, which is reasonable. Right? That's like if it was an endowment or something like that, that's a reasonable spending level. The problem is that spending level, again, like I said, it's going to increase. So if we have a market decline and the value of the assets decrease, that percentage is going to go up. And this goes to part of our investment philosophy, which is lower volatility investments that protect on the downside. If you have two portfolios, okay, one that's a very volatile portfolio, and another that is a less volatile portfolio. The first portfolio goes up 50% the first year and down 50% the second year. The average rate of return is 0. But what actually happens to your money? You have $1, you go to $1.50, and then you have 75 cents, right? You actually lost 25% of your money, even though the average rate of return was 0. Second portfolio up 10, okay, you're gonna look pretty bad in that first year. You're lagging by 4,000 basis points. Second goes down by 10, right? You're at 99 as opposed to 75. So the second part is really the type of the portfolio that we really want to be in. On the bottom of page 6, you can see the funded ratio has increased from 85 to 86%. We've actually exceeded the assumed rate of return over this, 5-year period. Some of the plan assumptions have changed. So on the liability side, whether it's a mortality table, reducing the assumed rate of return. The pension management board has worked with the actuary to have a more conservative assumption with those. So if those assumptions were not reduced, we'd expect the funded ratio to be actually a little bit higher. But given our rate of return of just under 12% for the last fiscal year, we expect this for the next actuarial report to be in the high 80s, low 90s percentage going forward. Page 7 is just from the actuarials.
Megan, do you have a question?
Sorry.
Yeah, what's the definition of normal cost here?
So normal cost is like basically the 5-year smoothing that you have over basically it's either banks in gains from prior years or amortizes the losses over prior years. So that's saying that's basically like banking in a gain that we had from prior years and putting that into the actuarial value of the plan. Yeah.
This may be in later, but how many employees or former employees are in the plan? I assume there's some town hall, police.
Yeah,
Also some Board of Ed employee, not teacher.
some Board of Ed, not all police officers, some have opted to go into the defined, couple of them have opted to go into the defined contribution plan. And then those that have been grandfathered in the pension plan. And I don't have that figure, but I think it's like 80 or something like that. Do you call active participants?
That sounds about right.
Yeah, I can get that for you.
Yeah.
Actually, I can, yeah. Okay.
Does that include? Oh no, these are all people who
So
are elected.
So there's people that are retired.
Right.
And they are collecting.
Right.
And then there's what we call the active participants.
Right.
People that are working and are not collecting, and they are paying into the plan now.
That total is the.
And then the total is the total participants.
I see.
So it's broken down active, retired, total.
I see, okay.
And I gave you the active number.
Oh.
I will get that for you.
But of course, not every active, not every employee is active in the defined benefit pension plan. So that number has significantly come down, the active employees in the DB plan.
Right.
So, and because they're in a defined contribution plan. So since, this, say, they ask the question.
I'm not sure what to finish the rest of my sentence in my notes, but I will pause. I'm not sure what's after 80. If 80 is,
I'll go get a number, so,
It's-
because I'm guessing.
it's not even people who are in the defined pension fund. These are just all the people participating, but both in.
I'm not sure the number of retirees and the number of people who are actively contributing to the DB plan. I'm not, and that
I
was,
see,
that's what
sure.
Leon is at.
Okay.
Yeah.
So you wanna,
I feel like retirees are somewhere in the, I wanna say, 60 to 70 range, something like that, if I remember correctly. It's in the actual report, if you wanna, that, we didn't put it in here unfortunately, but, that seems about the.
Yeah, the reason why I was asking that is trying to, because you've managed the plan a certain way. If you have, escalating numbers of, like, if everybody was still in a defined benefits plan.
Yeah.
You've managed it one way, but if you have a lot of people who are active employees who are not in the plan at all, and you're really servicing people who are retired or have
Going to
long
retire.
tenured employees, you probably manage the plan a different way.
Correct. Yeah, because if you had everyone going into the defined benefit plan, you'd have units coming in for employees, right?
And
That's one thing.
More obligations way out there.
Exactly.
Right.
Higher liabilities in the future as opposed to more in the present, right? So this goes back to, the liabilities, increasing basically from 1.2 million a few years ago to 5 in a few years.
Right.
So,
So the town plan has 98 retirees. And we have a total of 64 participating employees, so that's like, whatever that is, 162 total participants in the plan.
surprised it's not that.
Out of retirees.
No, even the active, but anyway, go ahead, Karen.
any other questions before we move on? If not,
So you don't manage the defined contribution plan at all then?
no, we do. We consult on that.
Oh, I see, okay,
Yeah.
but those numbers completely separate.
Those are completely separate.
I see.
This has nothing to do with the defined contribution plan.
Okay, I see.
Yeah, but we provide education, investment advice, and then report to the pension benefit board about the defined contribution plan.
I have one question, okay. I know, clearly a spending portfolio, but I see referred to in the presentation a lot, really giving the weighted returns, time weighted returns.
Yeah,
Versus, as a spending portfolio, I would think that would be dollar weighted or,
Yeah.
weighted returns.
so that's what we, I kind of mentioned that actually, that basically if you look at page 4, we have to put more emphasis on maximizing the certainty of outcomes, the money weighted rate of return rather than time weighted. So the time weighted rate of return, if you look on page 7, okay, that's what the actuary actually.
Oh, that's the actual, okay, so
Yeah,
that's why
so
there's the two.
on page 7, the top of it, that's the time weighted, I'm sorry, the money weighted rate of return. Dollar weighted rate of return. 100% agree with you on that. That goes back to my 50% up, 50% down, 10% up, 10% down kind of calculation. Because we want to make sure that what actually happened to the pension plan, because the managers can do whatever they want in terms of average rate of return, but it's really the volatility of those returns that matter more.
Absolutely.
So we put a lot of emphasis on money weighted. And as you can see on page 17, that our compound money weighted rate of return is just under 8% the last 5 fiscal years. And then if you add this last fiscal year, I think our compound average rate of return over the last 11 years is 760. So basically 9 basis points higher than the assumed rate of return, and 120 basis points over the last 5 years, right? So that's one of the reasons that we kind of banked in these gains. And then what is happening, there's a 5-year smoothing of the rate of return, so that again, the ADEC or the actuarial determined employer contribution that the town has to put in isn't volatile from one year to the next. There's a little bit more stability with it. And so basically it weights the most recent return more than the fourth or fifth year returns, right? So we'd expect that, the fund ratio and the ADAC should be, the fund ratio should go up, and the ADAC should probably go slightly down next year, given the fiscal year returns that we've had.
Just to close the loop on Jeff's question. To break down the numbers, the defined benefit plan currently has 26 contributing police officers, only 20 contributing town employees, and 18 contributing Board of Ed employees. Now, contrast that with the 401A, which has 49 contributing town employees and 33 contributing VOE. So you can see how it's the DB to the DC has really changed over the last 10 years, 9 years.
Are we on page 8, so, or,
We're page 8, yeah?
question on the, 61 basis point?
Yes.
What is the consultant of the 61 basis points?
Basically half that. So half consulting, half investment management fees.
So
And the
you
consulting,
use a fair amount of passive managers and active. I looked at this and this is kind of like a cookie cutter report. I assume this is not what you give Saybrook, right? You give more detail.
oh, absolutely, yeah.
Yeah. So I don't know any of the managers or whatever. All I see is, allocations and percentages. So
So I can get you that.
I'd love to see the managers involved.
Yeah, so I was saying, I think we're basically about 65% active, 35% passive.
Mhm.
100% of the fixed income is actively managed because of the volatility in interest rates right now. And I'd say that we've moved a little bit more passive over the past, few years on the equity side of things, just to sort of like balance our active passive mix, and because of a lot of the momentum that's gone into the indices that we've seen in the last few years. But I can get you those managers.
Yeah, I'd love to see them. And do you include alts in kind of your fixed income bucket, or how do you,
So there are no alternatives in the portfolio.
none? Okay.
No. Yeah, it's
So,
stocks, bonds, and cash. That's it. And that's a liquidity preference that we have in terms of, again, this being a spending portfolio. And then two, I'd say the preference for the pension and benefit board to have just more transparency and visibility into the
I
investments.
mean, with the rapid development and, now the risk tools and alts, is that the consideration of possibly adding alts, or is that not?
It's always a consideration. Morgan Stanley has the biggest alternative investment platform on the street. So, happy to have those discussions. I just say it's never been really a focus of the pension board.
It's, I know just in recent years, looking at last year, it's added a lot of alpha without adding, much risk. So it's just something I use in my portfolios. It's worked out very well. No, just thought.
Yep. Thank you. Appreciate that. So on page 8, I just want to kind of point out, and the funded ratio, how it's grown, and this is again the market value sort of funded ratio, but you can see in 2016 was down around 53%. It's now up to 88%. In terms of, again, this is not the actuarial funded ratio, but this is just market value over the future liabilities. You can see the money weighted rate of returns as we go back basically 11 years there. 61 basis points all in, inclusive, and it is on a schedule that basically reduces as the assets continue to grow. So I think the last time that we met here, the pension fund assets were around 25 million, maybe 24 million. And the fee was about 70 basis points, so it's been cut since then. And as it sort of escalates up, pretty much every $10 million, the fee gets automatically reduced. And then one of the things too is that's the consultant fee that gets reduced, because the investment manager fees at Morgan Stanley, we get sort of most favored nation pricing, which means that if we have an active manager that is in the pension plan, they have to charge our clients what their employees would be charged to be in that plan. And it's not like a traditional consultant where if you put in more money with that manager, the fee goes down. you just charge the lowest fee, whether you have $50,000 or $50 million with that manager. So.
When does the town get a new actuarial analysis every year?
every year.
Okay,
So
so,
the town defined benefit plan hasn't, every year. Fire department is every other year, and the OPEB is every other year, other post-employment benefits.
okay,
So, they usually come and speak with us in February, and then the board will vote on the assumptions. And as Kevin mentioned, we've been reducing the discount rate. So that's been kind of, every time we reduce it, the funding ratio goes down.
right.
So the market returns have helped to keep that funded ratio, level. And then, obviously, once the report comes out, it's included in our annual audit. Or, Molly Sable looks for some of the information to be included in that report. So there's a whole calendar of events working with the actuaries.
So the discount rate was 8.25 when I first came in, and then we're down to 6.75 at this point. Milliman did not recommend any changes this year. We listened to them. They didn't recommend any.
Okay,
We're not asking them, hey, we don't really want to contribute more, so could you keep it there? We're not doing that. We are at a actuarial recommended contribution rate or discount rate. And we are putting in the actuarially defined, or it used to be called the ARC, deck.
yeah, I was wondering if they would be suggesting higher discount rate with interest rates starting to trend up, or not yet?
They could suggest that, but we've kind
We
of
probably
learned our
wouldn't do
lesson,
it.
when we did it the last time. You go, it's easy to go up.
Yeah,
It's more difficult to come back down, the effects on the
Right.
budget. So, they think we're really at a good spot. Looking forward over 10, 20, 30 years, 6.75 and 6.5% for the fire.
yes, exactly.
Millman is pretty prevalent in the town decision. I mean, they pretty much own this state. They're
In what, in millions?
in terms of the towns and cities in like Connecticut. I mean, I know
I don't, yeah, I
They
mean,
do a fair amount of business, yeah, and one of the things I want to
they're
point
pretty expensive, aren't they?
Well, we did an RFP, several years ago on most of our vendors, and, I forget the name of the firm that competed. There was actually 3 or 4 firms that competed.
or
Hooker, that's what it
there's
is.
another one.
And, they came in, their pricing was great, and actually after we went through the RFP process, they added more services and more things that they could do for us, and so it was a worthwhile
You guys have-
exercise. But we've been looking for a long time, and we do look at that stuff all the time.
Just want to point out too, going back to the 6.75% assumed rate of return, one of the things that we do is work with the actuaries in terms of the asset allocation and what our 20-year kind of secular forecasts are for each asset class, and provide them sort of a weighted return, expected return of the portfolio over the next 20 years. And then they kind of compare that to the assumed rate of return to make sure that the portfolio is constructed in a way that can achieve that. Page 9 top. So Norman actually puts this out to do a study of Connecticut pensions, okay, and how well funded they are. As you can see, the fund ratios have increased over the past few years, but the average is around 80%, median's around 83%. Again, you're at 86%, so much higher than the average of the median plan in the state of Connecticut. So much healthier than many of the towns and cities that surround you. Bottom of page 9 is our asset allocation, the IPS. Okay, we do a review of this every year. In fact, last year we actually, the 2 areas in yellow, we changed. So we increased our target on the US large cap from 30 to 34. We decreased our target on cash from 7 to 3%. So those are the 2 changes that we made. Asset allocation is on page 10, so you can see what the current allocation was as of month end. Basically it's 65-35, with about 5% cash right now. Page 11, and again, I can get you the managers, so we can do that offline. But one of the things I want to point out here on page 11 in terms of the time weighted return, not the money weighted rate of return. But if you look at again, we're going back to this being a spending portfolio. One of the things we want to do is try to match cash flows, right? Have cash coming into the portfolio that's close enough that we can have the cash going out, because that means that we don't have to sell part of the portfolio or a lot or a majority of the portfolio to fund the liability, right? We only have to basically take the cash flow and then sell a very small portion of the portfolio. So if you look out on the, kind of 3, 5, 10 years, you can see here, I'll start with the 10-year, which is all the way to the right. About 6.7, almost $6.8 million came out of the portfolio over the last 10 years. But $6 million, more than $6 million of the portfolio came in just income, and that's dividends and interest. That's not market value increase. That's just dividends and interest. So really, you had to pay out, $730,000 out of the portfolio over a 10-year period. Not terrible, $73,000. That's less than 1% of the portfolio basically every single year. Again, on the 3-year, 3.9, 3.5, 6 coming in. I'm sorry, it's a 5-year. On the 3-year, 2.8 and 2.3. So that's part of the philosophy and the kind of the approach that we have. Not necessarily trying to go for the highest rate of return and take the most amount of risk, but give the most amount of certainty that we can pay the benefits regardless of what's going on in the market. And one of the things I want to point out here is that we have lagged the benchmark. We're very, very well aware of that. And there are reasons that we've lagged the benchmark. One is our underweighting to technology. Technology is 35% of the S&P 500 right now. We look at that as a risk, not an opportunity. It's a plan. We think that actually could increase given some of the IPOs that are coming out. So it could be as high as, in a year from now, maybe 45% of the S&P 500. Typically, when a sector gets a 30% weighting or higher, that's usually been a cause for concern or correction. So we have a much more evenly weighted portfolio in terms of the economic sectors. And then the second thing is, we protect a lot better in the downside. And when we look at sort of like, if you look at the second column from the left, okay, this is really just over the last 2.5 months. But it's been a more volatile period of the last 2.5 months. And you can see we got the benchmark by about 120 basis points. Okay. So when there's downside, we feel like we protect better. Okay. And that goes back to our lower volatility approach. When there's a momentum and sort of beta rally that we feel like we've had the last few years, we're going to lag. And we're very, very well aware of that. But you go to the bottom page 11, you can see we take less risk too. So in terms of our, versus the IPS, we're basically 1 turn less in volatility, understanding that we're in less return. But if you sort of look at this quadrant here, you can kind of see, if you just draw a line, kind of going from the bottom left to the top right, we're really right in line in terms of risk adjusted return with the benchmark. Any questions?
I mean, obviously with the investment policy statement and the really, focus on risk management has been in conversation about, whether or not this is the right benchmark.
Yeah, so we talked about that. I talked about different parts of like whether we should be using the Russell 1000 versus the S&P 500, things of that nature, and whether we're using right bond indices. But I think over the conversations that we've had, this is just, it's more of a benchmark to look at the asset allocation of the portfolio and how it's doing relative to the general indices that are out there.
And every year we do like mini asset allocation studies. It was like, for example, they were a little concerned, pension board was a little concerned about emerging market exposure for a while when it wasn't performing as well. So we will every single year kind of look at a segment of the portfolio just to test our theories, make sure it fits. And then when the results come back, the pension board takes a look at it and says, okay, that makes sense to us. And they have approved and they've approved of everything that we have in the portfolio in terms of asset allocation and benchmarks.
No, that all makes sense. I'm just saying, to the average individual that might be looking at it and see a 262 basis point underperformance, it's just a glaring thing. Can you explain that away by readdressing the benchmark? That's it. Because I understand
it
it's
is
doing what we kind of want to do.
It's a conversation that frequently comes up at the pension committee. So, okay. Yeah.
I think that really to take home is that, we're targeting lower volatility. And targeting low volatility most likely is gonna give you a lower rate of average return because we've just had more good markets than bad markets. That's really what it is.
And I think we all understand that and get that, and
Yeah.
pat you on the back, it's just really, anybody
Don't even pat the
outside,
back.
anybody outside looking in, it's just
Yeah.
a glaring, disparity, that's all.
Just page 12, this goes back to cash flow. You can see, this is the projected 12-month income summary. This is not expecting any, dividend increases from the stocks that we own or any increases in interest rates, which we've certainly had in the last few months here, but, just under $763,000 of cash flow again coming into the portfolio, regardless of where the market's up down sideways. And then we have a little bit of a blurb of, Morgan Stanley, who we are, the types of clients that we serve, who Becky and I are, what we do, our manager analysis team on page 15, which we feel like is a big strength of ours. It's the biggest manager analysis team on the street. So we do everything from separately managed accounts, ETFs, mutual funds, alternatives, wherever it may be, and have, on-site visits. We do everything from performance due diligence, to qualitative, like people due diligence, to cybersecurity. And making sure, because for a separately managed account, you're not commingled with any other clients. You have a town of old Saybrook account with manager XYZ. And we want to make sure that cybersecurity protocols and infrastructure is in place at every single one of these asset managers to protect your funds. So that's a sliver about who we are. And then on page 16, this is one of the things that we do every year for the pension benefit board. Excuse the small typo here, but the type font, I should say. But basically, this is a cash flow report, and it just gives us a sense of, again, what are the net cash flows that are going to be coming out of the portfolio, including dividends and interest. And basically, it's around $500,000 a year. It goes down to about $250,000 by 2031. So we're getting closer and closer to that cash flow matching as we sort of.
And the third one down is the actuarial determined employer contribution, which has been declining over time.
And it's expected to decline.
It's expected to continue to decline, so that's what affects our budget. So I want to point that line out.
Yeah, see, that's my only comment, maybe, it is really good to see.
Sorry.
Yeah,
it's possible,
it's not very.
Any other questions?
One more comment, all right, then the last one, but this is a good one. You have 16 letters after your name, okay, 8 of which I haven't even heard of before. Your designation. Commend you, all right? Maybe someday you can tell me what those other.
Yes,
designations
The more letters, the more letters, the more talking time you get.
I think I'm living up on letters because I got too many kids now. So.
I love it.
Thank you so much for your time. Really appreciate it. I appreciate everything we do.
You guys were great.
Yeah, Stu, do you have any questions? No?
I'll just make a quick comment. So the pension board is 7 members. The first selectman by charter is a full member of that, and the board of selectmen. Every other board, first selectman is ex officio too. So full voting member of the pension board. The meetings are the 4th Thursday of the month at 8:30 a.m. and no one has ever showed up.
Never.
Forever. So if you have questions or you'd like to actually see a monthly presentation, you're more than welcome to come by. If what we should do, Sarah, moving forward is we have our regular meetings with regular reports. But if we're doing something a little bit unusual during the year, whether it's an IPS review or whatever, maybe we want to alert the Board of Finance, and you're more than welcome to come. But you're more than welcome to come to any of the meetings and watch them, certainly be and comment. So 4th Thursday of the month at 8:30.
Nice to be here.
And you could also zoom in. You don't have to show up live. You can come by Zoom.
Yeah.
I have some questions.
Yeah.
If you don't mind.
Yeah,
So, I have to say initially that I understood like 10% what you said. And so not a dig on you. I just don't. This is way beyond me. So it's just I I'm not as financial person, I'm a candidate. So, so a couple of questions. So one, the pension that gets paid, is it inflation adjusted?
No,
No call.
No,
Okay, so once
there's been no COLAs.
okay, so the payment going out is defined. I mean, but you don't have to guess what the future inflation rate is gonna be.
No,
Okay.
not from the liability. It's more from what the expected retirees are gonna be going
Right.
forward. And what their
and
salaries
their
are.
potential age, right? So the, I'm sure if I get this, right, maybe, so the assumed rate, it is a number that you guys come up with. It's not a,
The actuary.
The actuary comes up with that.
right, but I mean, but you could change that number to a high number or a lower number.
Correct. The board could vote to do that.
Right, but if you go to a lower number, you gotta put more money in.
Correct.
Right, and so, okay, so here's a real dumb question, right? So, I heard like a 30-year, US something federal, is like 5.3 some percent right now, treasury.
Treasury, yes.
532.
Yes.
Yeah.
Oh, wow, really? That's pretty high,
Yes.
but that's guaranteed for 30 years.
Yep.
Right, so the dumb question is, if we drop this assumed rate to that number, don't we just park it and just call it a day?
So that's a great question. I actually brought this up a little bit. So basically, what we want to do is first we want to get the funded ratio to be 100% or even a little bit over 100%. So we're not there yet because we still have to grow it. So we actually have to do a little bit better than the assumed rate of return pretty much every single year as we go forward. If we got to 100% funded and the 10-year or the 30-year or whatever was paying 6.75, then hypothetically we could say, yes, let's do something like that. Let's defease the liability and just have that, go up, all right? But we're not there, first of all, yet.
Sure.
And second of all, interest rates aren't where we need to be. Because if you drop the assumed rate of return to 5.32 right now, that's a big move. The funded ratio would probably go down to 60-ish%, I'd imagine, maybe even less.
and even though there's no COLA on the retirees pension, we still have a working active participants who are getting raises every single year. So their salaries are gonna go up, and so we have to.
Sure.
So we would only do something like that if, or pop, entertain the idea if the thing was closed, if the pension plan was closed, and we would lock everything in.
But this thing will never close because the police will stay on it.
It'll
right?
never be closed. Well, it could be in future. If it's negotiated, it could be, but right now,
But it's only open to police, right?
only police officers, yes.
So this last, page 16, I really can't read the numbers, but something happened at 2031, I get at that point, that,
I think we go down.
so that we,
2031, I think that's the amortization of the unfunded liability potentially. What number are you looking at?
well, no, but
I
you
can't
made some comment at 2031, we
Oh,
crossed the path where
We're by 2031, we go from, $550,000 of a net cash flow negative to about half that, like 250. Okay, so what we're doing is we're moving closer and closer to cash flow matching. All right, which just means that money going into the plan equals money going out of the plan, like 100%. Right now, we're basically about 90% of the way there, right? But once we have that going on, then that means that the portfolio is pretty insulated, I guess you could say, from major market moves in terms of paying the liabilities, not in terms of the funding ratio, but in terms of making sure the liability will be paid and without having to sell one stock or one bond of the portfolio.
but that's like 7 years from now. No, 5 years from now, 2031?
Yeah, it's like there's
Yeah, I'm sorry, 5 years now, so, but you said that the point at that point is the contribution from a reducing number of people contributing plus the asset equals we're getting close to what you're paying out.
So it would be a reduced employee contribution, right? Let's just say a similar town contribution,
Right,
but because of higher assets, a
I
much
see.
higher interest and dividend,
right.
portfolio. And again, this is all based upon what dividend payment rates are now, what interest rates are now, they could be higher or lower, so this is a projection, right? But we do this, that's why we do it on an annual basis, so we can see like what variables the actuaries changed, what variables the market has changed, and then if there's anything we need to do differently in the portfolio, given sort of the, you know, the glide path, I guess you could say, that we have over the next decade.
I think.
And George, back to your 532, you'd have to have a pretty intricate, hedging program, because a long bond
Yeah,
varies with interest rates. So if interest rates went up to 6%, the value of that bond would decrease. So you'd never be able to fully fund it unless you you had some kind of, hedge to lock in a rate of return. You know what I'm saying? Because it's a spending portfolio. They're taking money out.
I see, I see, yeah, I see.
So,
Right.
It's much more difficult than
I see.
just buying treasuries and locking it, even if we were at parity and you could
I see.
do that.
and just the board knows too, we've had a preference to be more short duration in the
Right.
bond portfolio.
Good.
Even when there were a lot of calls to increase duration, so I think the total duration of portfolio is less than 3, so.
Some towns in the state have looked to, or maybe they have a different obligation profile, but they have looked to lock in their rate, right? They have gone to full fixed income portfolios. I think some of the smaller towns. Yes, no.
I don't hear anything about that.
Okay. I think some towns have.
They've given up a lot of
Yeah.
opportunity.
Oh, definitely. Okay, but they're lowering the risk. Okay, I thought a few years ago I heard about some towns, particularly in Eastern Connecticut, that were looking at locking in, but maybe they didn't have.
Maybe you're thinking about pension obligation bonds that they're issuing or something like that to try to fund
Maybe.
the pension more, I don't know.
Could be.
I don't, yeah.
Okay.
Is there an estimate? I mean, obviously it's not linear, what the estimate is? I'm looking at Barbara's report, but those are the numbers that I've worked, compact. So right now the fund balance is 32 million-ish. And the funded ratio is 86%.
Yeah.
What would it, numbers, what does the top number have to be, the balance, to basically become 100% funded?
So let's see. That would be on page 8. So as of last year, it had to have been about 34 million. And my guess is that's probably around, 35 million or something like that.
Right, 4 million bucks.
35 million. So what it'd have to be.
Right, 14% of 31 million, kind of do the short math.
I'm sure that math, but okay, I'll take your word for it. Okay, that's pretty close.
Any other questions on that?
No, that's pretty close. Wow.
That's part of, again, going back to our investment philosophy is, protecting the funded ratio is very important to us. Because again, the lower the funded ratio, the more the town has to put into the portfolio. So reducing risk as the funded ratio grows is kind of part of our investment philosophy, that we want to make sure that we're sort of implementing as we move closer and closer to 100%.
So you just went linear on your 86% then, that amount. I'll take your word. Thank you very much. Any other questions? Kevin, Rebecca, thank you so much.
Thank you. Appreciate the time.
Yeah, thanks.
Kevin DeMero, Dan Sontag, Lyle Lamothe, and Chris DePuy. You remember any of this?
Great, yeah. Yes.
Who?
My firm was acquired by Merrill Lynch in
Oh, really?
2005. Well,
When?
the firm I was working for.
Here.
2005.
I was gonna say, I think my brother used to work for Merrill Lynch, but way back. We'll see you in September.
Yeah, looking forward to it.
Couple
Thank you.
weeks.
Right now, that's right before my birthday.
That song.
Good to know.
Thanks for the time.
Yes.
Have a good night.
See you kids. Be careful driving home. Thanks for coming.
The mayor's got.
I failed my finance course, clearly.
What?
Failed my finance course years ago.
You're so nice.
You're very nice, you're very nice, but like, I'm just like,
Yeah, that's amazing.
Well, I bet you, what are you, you're a chemist? I bet you if you were to do a 45-minute presentation, we'd all go, whoa. What the heck is that? Everybody has their thing, right?
Yes.
You would be pi this and X that, this, that, right? You know your numbers.
It's very good, sir.
All day long.
That's okay. I think.
Okay, should we move on?
I don't know, they were chatting for a while over there, those two. Let's finish whatever they're doing.
Converted into like a bedroom. Okay.
They're still talking about Merrill Lynch.
No, thank you for your question, Stephen. You're right. I appreciate your question and yours too, Kevin. I'm doing great. Treasury report, Barbara, I think Kevin next.
Okay, so it's not a very big treasure. So it's the first month of a new fiscal year. Amazing. So we'll do our executive summary as of July 31st, 2026 for fiscal year 2027. So fiscal year to date, the town has received revenue of $28,046,791, or 51.2% of the total amount of $54,779,879 budgeted for fiscal year 27. We have to thank our tax-paying citizens of Old Saybrook.
I was just wondering, that it seems like a lot more, proportionally more of the taxes were paid this year than last year. From 51.
Well, you can see it's
Yeah, I mean, any guess?
it's 1.6%. We're ahead from last time.
Yeah,
No,
that's
Last year, that's how what I
It's
saw.
significant.
it is.
But I think
It's a
it's
significant
really,
amount.
it's kind of always we're always a little ahead at this
It
time of
does
year.
bounce, so.
Yeah, but it was
It
just.
does. You'll see us
Wonder
as
why,
every month I give you that calculation of where we are. Jeff, every month I tell you where we're at.
Yeah,
We always fall behind at some point.
okay.
But at this time of the year, where people love to come in July and pay their taxes.
But more so this year than last year.
I don't know, I guess
But
so.
numbers are saying.
I guess they didn't. They were very excited about it. Maybe because they didn't feel their taxes went up.
Yeah, I don't have an explanation
Yeah.
for that.
You're not
It
complaining,
could
but
be the way the weeks fall and the number of days.
It could be. All I know is that
There's a lot of.
Yeah,
okay.
Things like.
you know,
that.
I would pop in because, I don't have an office in here. I work from home, but I would pop in and would always be busy. They'd always be paying their taxes.
Yes,
It's really exciting to say. I would be like, yes.
great.
Good to know. Okay, then we'll just quickly go over the mini golf. So during July, $70,852 in mini golf fees were booked for the Park and Rec Strategic Sinking Fund. So fiscal year to date, mini golf revenue totals of the same. So the current balance is 3053 is 893,402. So boy, mini golf is making a lot
Yeah,
of
no
money.
kidding.
They're busy.
So imagine what it's gonna be when
When it's
The point is
beautiful
all-
down there. When it's not so ugly, right? Okay. So. Next, we'll move to the authorized investment section. So at the end of July. Town had 54.6 million in its bank accounts. So, I'm sorry, I didn't have a lot of time to do my report, so I'm a little over the place today. So, let's see, our short-term cash management, we earned $392,000, $392,684, which we added to our principal. So we've added, so the principal now will be changed for this coming year to 11,659,050. So that will be the new number you'll see all the time there. So that we'll be making more money on that. It's nice to see that go up. So we said we would add that to that. So I want to just point that out to you guys. And then we'll move on to our stiff account. So the stiff rate has stayed steady again at 3.80. Today, it's at 3.74. And then Webster last month was at 3.79. And we're not going to cover the pension because we just did that excessively. So we'll move to page 2 of the treasurer's report. So tax revenues were 27,790,736, or 53% of the amount budgeted for fiscal year 27, which was excellent for the month of July. And in terms of local revenues, the town collected $256,055 locally in July. We received $104,459 in interest and dividend income in July. We received $54,604 in recording fees, $36,386 in building permits, and $41,500 from Harvey's Beach in July. They were very busy. That's all I have, guys. Any questions?
I have a general question, and it's not just directed to you, it's probably a
Sure.
Leanne, Carl thing. I've been following some of the Webster Bank news. I mean, are we
Somebody's buying
considering,
that.
yeah,
Yeah.
something there? Are we looking at that, or would we consider a move to a more local?
Well, see, we have a relationship where they give us an excellent rate, but that's a good question, Leanne.
So we did an RFP banks several years ago as well, and we went from 3 to Webster. I already said that to Sarah. I said, maybe that's something you want to look at.
Yeah,
So
Yeah,
Do you think they'll continue to give us that excellent rate they're giving us?
I'm sure they will.
yes.
But
yeah, I
that's
think
not-
it's
but
more,
there's
yeah, that's not really.
operational
Right.
considerations, because the last time we merged, I forget who they merged with. Stir, yes, and it was an operational nightmare for us. Their cash management platform was totally messed up, and we had a really hard time with that, so we're a little gun shy. But that doesn't mean it's gonna be bad, and then they're gonna be coming in to visit with Sarah in September, so.
So switching banks, is no
I'm sure
small
it's a-
feat. And we did do an RFP, and assuming, I mean, Sarah and I will talk about it, but assuming the transition to Good Santander goes well, I would probably say stay for a little bit. You know, we switched from Liberty to Webster because, you know, you mentioned the local bank.
Yeah.
And we found that some of the very local banks, their technology was not even close to what was offered at Webster, even though Webster's a very local bank. They're a little bigger. And in fact, Liberty, who we had been banking with, kind of knocked on our door and said, why did we lose this RFP? We told them. And so, you know, I'd imagine a lot of that is evened out maybe now, but I don't know where the technology is. You and Sarah might know better than I. We'll look at it, and certainly we will demand the same or better service.
What about,
What we've been
is
getting.
KeyBank considered local or no?
I'm sorry,
KeyBank, is that considered a local bank or?
they're regional, they're,
I really like the KeyBank
yeah.
down the street, they're good managers.
Yeah,
But that's not who you're banking.
No, I know that, I get it.
So
But do we
anyway,
pay our
we'll look
bills?
at it, and we'll talk about it, when they come
Like, do
in.
we pay our payroll?
It's something that's been on our radar.
yeah, I mean, keeping things local, security, all that,
I know.
obviously, there are factors, but yeah, the technology platform.
A lot of money.
It's a lot of money, but we get a great rate, that's what I like, it's making money. That's the treasure.
Fun, yeah.
Any questions? Yeah. Yes. Thank you, Barbara.
Well, thank you.
Administrative report?
Right. So just an update on fiscal year 26 surplus. We finalized everything. It's not done. It won't be done until the auditors say it's done, but our surplus is 3,195,000. Of that amount, 1,375,000 and change was authorized at the last meeting. Still has to go to town meeting, etc. And that leaves about 1.5 million for capital non-recurring or other types of whatever you all want to do with it. So So that's where we're at with fiscal year 26. Turning to fiscal year 27, the first thing I want to point out is with the budget, I've added a line item underneath the total line item that says Board of Ed 2% carryover fiscal year 26, $616,949. That's 2% reserve account that they have. They have not spent anything out of it yet, so we are in essence keeping track of 2 fiscal years, what they did, so they can still spend from last year and what they are spending for their budget for this year. So that hasn't had any activity yet, but as we move forward, you'll be able to watch what happens there. In terms of the ARPA appropriation, again, we're almost done. Social services has completely finished theirs, so still says $665 left here, but I know it's all gone. That will be removed next month, and we continue to work down all of those other expenditures, and I have no doubt we're going to finish that.
I was in touch with Torrance Downs about the Cypress Cemetery, and really told them this needs to be spent. And it looks like they've taken some of it down.
Some of it, yes, correct.
And I'll also check back with the generator. I think I can take care of that this week. There's supposed to be, there was a little bit of a mishap with the generator install, and he said, don't worry, I won't charge you for putting the fence around the generator, but he might as well. We're not gonna send the money back to the treasury, so.
On page 2, a new section's been added to the finance director's report. So now that before we had the spotlight on ARPA, when we were managing all of those funds, we wanted to see what was coming in, going out. And so now there's at least 3 big projects that I think that the Board of Finance probably would like to keep tabs on. One is the Kate. And, just to break it down between the types of funds where we're getting them all, whether it be from raising debt, monies that we put in through our surplus funds, grant funds, other funds, which is donations. So that's all outlined there. And as we start to spend these down, Sarah can talk about what money she's spending first, whether they be bond proceeds or donations or however that's going to work, and what is left and how the projects are doing. And so just as a reminder, the Kate project is not to exceed 11.3 million, and the debt funds are 6.3 million. And the Acton Public Library, we talked about this last month, put into place all the surplus fund, all the funds that were town approved through town meeting are listed there. And we did put back 150,000 as discussed last month. And that's also what helped to contribute to make fiscal year 26 surplus a little bit higher there. And so of that 1 million, in the Acton Public Library, 1 million of town funds remains there at this point in time. Department of Public Works Garage is 5.2 million, of which the project is not to exceed 6.2 million. We did put 1.5 million of surplus funds, but we're only counting 1 million towards the construction of the garage itself, 500,000 towards the pre-work engineering.
And other soft costs.
And other soft costs. So those 3 projects are outlined, and I'm perhaps when Saybrook Point or something else comes in, a lot of big things working on to keep track of. Since this is the first month of the fiscal year, there's been no business that has come before us that has been approved, so that's why all those categories are blank. In terms of the cash flow summary, this is just a nuance of rolling everything over. So we are starting the fiscal year with just under $45 million worth of funds in all of our bank accounts. And then as we move forward, we'll see, what the ebbs and flows are of the cash flows, but I don't have any comments on that per se at the moment. The next section is the capital outlay section. And in this is the first month of the fiscal year, so What is listed here is the fiscal year 27 transfers that came out of the budget document itself. It's the $970,000 that was approved at referendum, so that's listed down at the bottom. All of those transfers have been made and now they are incorporated in the balance. I did make one mistake here under the long-term liability fund, which is up from the bottom. We did transfer $100,000 in there, but the new balance is $606,838. So balance there, $606,838. So we'll monitor those projects and all those new projects, like the park and rec bathroom step ups and all of those things, as they get done, we will see those balances decline. Those were the focus of capital items that were approved in the budget, and as part of monitoring the budget, we'll watch how those things go. We have a very healthy, capital non-recurring fund of 2.5 million. And if we add another 1.5 million to that, we're gonna have a very, very substantial, very strong, capital, non-recurring fund. Second page, I should have mentioned that we did meet with, Mark Chapman, who's our financial advisor today. We went over, all of the debt issuance. We are on target with everything. We're almost done with our, preliminary offering statement, so that's going to be coming out to the working group in the weeks coming up, and it looks like we're all set to issue that bond. We're just waiting to see what happens at the referendum at this point. So down at the bottom where we have debt service, at the end of June, we began the year with 13.4 million in outstanding debt service. During this fiscal year, we're going to retire 1.960. We're going to add an estimated 11.3, depending on how the referendum goes. So our estimated outstanding at the end of fiscal year 27 is 22.7 million. Our debt service budget is 2.617 million. And Sarah's going to be working on some modeling the new issuance, to just make sure that we work within our budgeted debt service for fiscal year 27. We've also made, jumping up a little bit to the pension plan, we have made our actuarial employer defined contributions of $808,575,000 came from the town and $233,000 from the Board of Ed for defined benefit plan for the town, and for the fire department it was 281,000. Those transactions have been made. If you turn to the last page, when we have all the charts, just a couple of things. It's the very first month. These balances might be a little bit off, but you can see here that the town made its defined benefit contribution. So that's, I'm looking down the column that has the percentage. So 100% has been made there. Going down a little bit more, the fire department, we made that employer contribution. So we've spent almost half of the fire department budget. Youth and family, we've made that transfer over to the off budget accounts for them to spend as the town's portion, which is will be commingled with grants and things like that to support the entire youth and family budget. And then the very last line item is the capital outlay, the 970,000, which has gone off budget and is listed on the page to all of the funds that it has gone to. Excuse me. And I'm happy to answer any questions.
And is it your last Board of Finance?
It is.
Yeah.
Wow.
But I'll say one thing. I'm sure I speak for everybody. I mean, it's amazing with all the projects that have taken place and all that's in play right now, and the town funds are being deployed. I mean, this budget is solid, and the fiscal status of the town is solid, and that's, I'm sure, no short part to you or to Carl, and there you take over a nice budget.
I agree.
There's a lot of good things going on.
Yes.
And when she meets with Moody's, she can toot her horn about all the good things that's been accomplished, and it's been everyone, the Board of Finance, the Pension Board, everyone has contributed to it, so I'm very happy to be leading it like this.
And, yeah, I don't wanna talk business, but yes,
Please talk business.
Anybody jump in on Steve's comment? Let's torture her, let's just like.
Tell her how great.
Oh, Leanne.
Leanne. We're gonna miss you so much, Leanne. I'm gonna
There's
miss
just
you
a guy
terribly.
right down the road, you might see me peeking in.
Yeah.
Everybody doing.
But I have Leanne's cell
Or
phone,
not.
so I can still torture her.
We'd be like, Leanne has her hand up again.
Hey, you guys wanna know something great?
Yeah.
Leanne's husband's on our pension board.
Yeah, we put him on.
So we still get a little.
Get a little, Mike's a retired banker. And,
He knows Megan's husband,
right,
Yeah.
right.
they work right down the road, I think, or used to work right down the road. They were credit unions. Yeah.
So, just very quickly, the reference to the capital non-recurring fund and that we might be adding a very significant amount to it, but you know, if we're up to 3.5, 4 million in capital non-recurring, think about the town and the buildings and the maintenance that goes on and the possibilities for needs. And having 2 million really seemed almost precarious. I'm not saying that's a small amount of money, but I'm actually very glad to see a very significant amount of money, I hope, go into the capital non-recurring account. There are needs that are gonna be coming up. I mean, we know that. And have a little bit of a cash pile to be able to apply to a project is a good thing. And certainly in the case of an emergency, if we needed a significant, $500,000, we have the money to do it. In addition to that, those funds are very useful for matching dollars. It's one of the things that's really allowed us to go get grants and say, well, we won't match just 10%, and that's 25%. When you match a higher amount, the state is very likely to give you a little bit of the money. Ferry Road Field's a very good example of that. $1 million project, we're putting in close to 250. I don't know if any of you have driven by, that they went right to work on that, and that's getting done. So that is my comment on the surplus funds going into capital non-recurring fund. The Board of Selectmen plans on a meeting tomorrow morning in the hopes of the Trails Grant. Getting that, that's something we needed to clean up. That's something that I probably missed 2 years ago when we got the grant. We're gonna do that. Take that to town meeting along with the surplus funds next Tuesday at 5. Just so you know, just to get that. That way we'll close the books in the month of August. So, anyway. I'll leave it at that.
Questions from people? So on page 3 of your report, right, so the capital non-recurring budget, fund 3350, we're gonna have 2.5 million. So, section 3.
Yeah.
Next month, that number will be like 4 million.
So are you looking at, the fund 3350, the 2.5 million?
Right.
Yes, the capital non-recurring will be an action item that will come before you next month. You'll vote on that, then it'll have to go to town meeting, then it'll be put into the account, and then it will be, increased. That's what's.
But then the last time when we appropriate all the other,
We didn't do capital
they
non-recurring.
would just say, it'll just bounce right down, it'll just go to the fund anyway.
No, you have to do, so the reason why we don't do capital non-recurring right away is twofold. One, we wanna make sure that all the other projects are approved, because if let's say one doesn't get approved, then that would mean we would have more to put in capital non-recurring. So we wanna make sure that happens, and then also, we're still kind of closing the books, and so we wanna make sure to get the numbers accurate as possible. So it's like the last piece of business, we put whatever's left over. And it's okay that it happens in September, you know,
But it'll be 1.5 million in middle of that.
it'll be about
Then that
less than
number will
that.
be
Yeah.
4 million, which is what you're talking about.
About,
Yeah.
Okay. This town meeting you're talking about, is that the date for the referendum as well for the bond? The town meeting?
no,
No.
no, different town meeting,
Oh.
yeah. The town meeting I'm talking about for next Tuesday is just surplus funds essentially. The town meeting for the Kate, the DPW garage is September 9th. Which will have no vote taking. It'll just be a town meeting, which will adjourn to referendum for September 29th. There'll be two presentations at the September 9th meeting, one for the garage and one for the Kate. Answer questions.
I see the Kate was doing an informational meeting also.
They should be, yeah,
Yeah, I can't remember the date.
they're doing their own thing, yeah.
Yeah, but I will say it's the day after our presentation. I know I signed my company up
Okay.
to be a sponsor there and host one of the events. So 1970s theme. So everybody will be invited.
Can I have a question about page 2 of your report?
Mhm.
The top part where you're gonna track all the large projects.
Yeah.
Most of the projects, like the library and the DPW garage are town projects, so we control the money. But the Cape, $500,000 that's coming, would that money actually come, would you actually
We'll
be,
track. We're gonna track all the dollars.
so you'll be writing checks for those money?
I think we should probably.
They're gonna give us the money and then we'll
Yeah.
write the check.
Yes.
Oh, okay, even though, okay,
Because it's an $11.3 million authorization on behalf of the town, and I
I see,
think we should track the dollars. And they're good with that.
I see, okay. But it'd be easy then to track expenses because you guys control that,
Yeah,
sure.
yeah, we don't want bills on an authorization that the town might approve, assuming it's approved. We don't need checks going out from this account and this account.
Right. I was just wondering how you're gonna manage that, if you're gonna manage the whole $5 million.
So- And plus, it's our building and it's our capital asset, and we have to have the backup
That's fair enough.
for all that stuff, for what it's worth.
No, I like the table, that'd be good. It's very nice. Like that. Stu, any questions online? No? Any other questions? Thank you, Leanne, you're also happy. Oh my gosh, thank you. Should I move on?
Yeah.
The next item is actually Carl's idea, all the contracts.
So, the excess, special education excess cost reimbursement that the schools receive, they turn that over to us as their surplus, essentially. $99,000, I think it was,
99,594.
99,594. We don't need the money. So I said to George in an email after the last Board of Finance meeting, I would recommend this board just turn that money back into their capital account. I mean, what do we need money for in our surplus? We don't. And they can use it for other purposes.
I will.
Yeah, and, you know, I just felt like, you know, what we've traditionally, well, tradition's probably the wrong word, but you know, we don't usually take their money as surplus and use it on behalf of the town unless we need it. And in this, you know, we certainly don't need it this year to balance the books. So as far as I'm concerned, that money, I'm recommending to the Board of Finance that you consider turning back $99,594 back to the Board of Ed to put into their, what account?
Board of Education Sinking Fund 3354.
So quick question about, so again, coming back to page 3 of your report. So, the second section, then section 3, the Board of Education 3354, right now the balance is 1.1 million. Last year we gave them,
150,000.
Oh, wait, what happened to the,
We put it in the air
oh,
conditioning.
that has a separate number?
Yeah, that has a separate number.
Oh, okay. So last year's special education was 150,000 reimbursement.
Well, it wasn't special education. They had a total surplus. I forgot what it was, but like, it went to like the air conditioning.
Yes,
fund.
yes, yes.
And then there was 150,000 left over, and they said they requested it to be put into the sinking.
But they
fund.
took the,
They took their full surplus,
they took the reimbursement last year.
yes,
Yes, okay. And I think it was higher, a little bit higher this year.
yeah,
Okay.
yes.
Okay, so essentially the same idea, just for this.
Yes.
That was kind of a motion, you can just say is,
It's actually a motion, I actually wrote a motion.
Do you want me to read?
Yeah,
this?
you don't mind.
Okay. All right, a motion to appropriate $99,594 for the Board of Ed Capital Sinking Fund and transfer the monies into Fund 3354, further to move this motion to town meeting.
Need a second?
perfect.
Second.
All in favor, please say aye.
Aye.
Aye. Thank you.
Thanks, I'm gonna need that, and so I don't forget, is the Board of Selectmen will have to act on that and send it to another town meeting, so we may not. Do you need that done, like, do we need that? That's-
That can be done when you go with for the capital non-recurring, do it at the same meeting
Yeah.
as that.
Okay, is that part of, technically part of fiscal 26, right?
It is,
So
yes.
you would like this done sooner, on the sooner
Yes,
side rather than the later side? Okay, all right, so you'll remind me,
Yeah, I will.
send that to me,
I
that
mean,
motion.
they could vote on this tonight if they wanted to, the amount for the capital non-recurring,
Oh.
only if they want to, I don't want. They don't have to.
Well, if you vote on the capital non-recurring tonight also, you could do that too. Because that would clean up everything from fiscal 26. So
What is it, so, do you,
No, it's fine.
to move, 1,470,841 to the capital non-recurring fund 3350 from surplus, and further to move that to town meeting.
That was a motion?
That, well, I can't make a motion.
Well,
That's
I'll make that motion.
Thank you. And a second,
second.
thank you. All in favor, please say aye.
Who seconded Meg?
Thank you, Sue.
Could you
okay,
give that to me? I didn't.
I'll give you the amount.
Okay.
you'll get those both to me, bring them to the Board of Selectmen.
And so this will not include the 99,000 then, that we just gave away.
And the 99,000 has been deducted from that.
Perfect, wow.
So the number is
That's stunning.
335.
Like that.
No, exactly, we just did that, right?
Just like that.
I know, she just did that, she just did that, amazing.
Now we're gonna spend more money on the next item.
So that was moved to 10, so there will be a time meeting.
There will be a town meeting on both of those,
Okay,
99 and the 1.5.
okay, so we haven't made a final decision.
Right.
The residents.
Oh, yeah, right, no, but you just did the math on the 99,000 on the spot, that's pretty good.
Well, I have it on Excel.
Oh, I
I do that in my head.
You shouldn't have told them that, you should have told them, they say,
Brain.
Went with it. First thought you just did that all in your brain.
All right, thank you very much, thank you all. Next up is the Deep Vented Trails Reimbursement Grant. I think this was up the last time, but we ran out of time, so I think this is probably good.
Leanne, why don't you,
Okay, so-
we,
Do we, do you want me to?
go ahead.
So, we, a couple years ago, requested the Board of Finance for a reimbursable grant, which was all approved in the amount of $366,640. And as part of that grant requirement, the town was required to put up its own match of $91,660. And when we did it originally, we forgot to ask for the town match portion. So, we are requesting a motion to move the 91,660 from capital non-recurring fund 3350 to the granted fund for the trails plan.
Yeah, so this is, well, why don't you make the motions and then I'll comment.
Right, so I'll make a motion to approve a town match of 20% or 91,660 for the 366,640 reimbursable deed grant for recreational trails in the capital non-recurring fund 3350, further to move this appropriation to town meeting.
Yes, second.
So
Steve?
we just simply forgot that. That is the trails grant down at Saybrook Point that we will be incorporating into the plan. So just so you know, when we put the RFP out for landscape architects for Saybrook Point, we made mention in the RFP that we have a Connecticut Trails grant and we'd like them to incorporate in their design the concept for the trails that was put into the grant application materials. It's possible that concept design might change, and we asked the consultants if they would then work with us to go back to deep if we had to change the design, because once you submit something to the state, sometimes they don't like any changes. We wouldn't be spending any more of the state's money or the town's money necessarily. But we do want when we got the trails grant, we didn't know we were gonna be acquiring Saybrook Point. So circumstances have changed, and of course, Deep loves the fact that we might be acquiring this. And I say might, it's not a fight, we don't own it yet. We're scheduled for October at this point. But they're putting a lot of effort into their end, and they submitted a lot to the zoning and ZBA, as you probably saw on Facebook. If any of you are on Facebook, you can see the document design. So anyway, it was just an oversight that Leanne did catch recently. And I'm like, geez, I hate that, that it slipped. But this is an easy correction and we were gonna do it 2 years ago. And now we're doing it now. And we haven't done the trails grant yet anyway, so it's actually good.
And they're holding money for us?
I'm sorry?
They're holding money for us? That's 366,000?
That, we already called them, and they will easily extend it through 2027, they said. And they said, if you need another year, no problem. They don't mind. We already had that conversation about 2 weeks ago. Usually with state grants, there's about a 3 to 5 year window that you have to use the money. So they're pretty generous with that.
Very nice.
Yeah.
Any other questions?
This is just separate from seawall repairs.
We could do. Taking out the acquisition of Saybrook Point, we needed to fix the seawall before we could put a sidewalk on it.
Okay.
So yes, it's a separate and apart. That project is done, just so you know. Actually, why don't you vote and I'll update you. I'll update you on the seawall.
Okay, so I need we have a motion in a second, so I need a vote on the putting 91,000 plus into the special non-recurring fund. Or in favor, please say aye.
Aye.
Those may, thank you very much.
So selectmen's report?
Please, yeah.
Okay, so the seawall, we estimated, and the reason we estimated $800,000 for the fix was that was one of the contractors who we said, could you take a look at it? And he threw an 800,000 number at it. At the end of the day, we're probably spending about 450,000 on that seawall, and it is done. The contractor is out of there. So we have approximately 350, a little less, about 350,000 remaining. 175 of that, of course, is Connecticut Port Authority money, which we have to return. But this board town meeting approved 175 remaining from capital non-recurring. So in theory, those funds would be returned to capital non-recurring at the end of this project. I might make another suggestion. There's that big, beautiful deck out there that I think would be a real, assuming a landscape, the engineering firm that we're gonna hire agrees. I think that deck out there would just be stunning to repair. And put picnic tables on it. I think that would be a real, signature structure. I don't know if you're familiar with what I'm talking about. So what I would hope that this board would consider is just holding off on maybe returning that money to capital non-recurring until we have a better idea as to what we're gonna do down there. But I just wanted to give you an update on, when we got the trails grant, we couldn't build a concrete sidewalk on the seawall. We needed to do the seawall first.
I went by, water last week by the seawall. It looks great. You never know what's ever, right, in disrepair.
Well, yeah, they did a lot.
Yeah, I mean, it looks
did a lot
good.
of repair.
So you mean the deck is the way it juts out?
Yeah.
Right there, yeah.
It's in total disrepair.
Yeah, oh yeah, I know.
Yeah, yeah.
Wood planks all over and everything.
Yeah.
Yeah.
So that's that. Ferry Road Soccer Field is well underway. They anticipate getting sod down in late September, early October. That'll be irrigation also, so we don't have to worry about whether there's water or not. That's gonna be a really great project when it's done. The contractor is very eager. They were very eager to start, fit right into their schedule. Saybrook Point, I think you have an update on, just so you know, our waterfront committee, that's what we're calling it, met last night and we winnowed the 12 RFPs down to 6, and I think we're probably going to interview 6 firms. That's a lot. I was hoping it would be 5, but I think we're going to interview 6. We really have the entire month of September to make this decision because we're not closing on the property really until October. So, assuming the town meeting goes well next week, we will have $1 million ready to go. The contractors are all in the $300,000 range, just so you know. 200 to 350 about for the fee that they're proposing, all of them. And then, but really top-notch firms. So we're actually gonna start interviewing August 31st. We have 2 confirmed. We're gonna add a 3rd, I hope. And then we'll do 3 more at some point in the month of September. And then the committee will meet and make a final decision and choose the landscape architect civil engineering firm that they'd like to use. We met with our financial advisor today, as Leanne indicated. Sarah was there and we went over the bond issuances, assuming they pass on September 29th. I assume a few of you know Angus McDonald, this civil engineer. I walked from the causeway to where the sidewalks pick up over in front of Fenwood to look at a project to possibly build sidewalks there. Eventually, that's one of the areas I hear a lot from people that once they come off the water in front of Fenwood, all the way to the causeway, there's no sidewalk. So last year in we're in 26. Early in 25, I had Angus McDonald do a survey from the causeway to where the sidewalk picks up at the water, not where the sidewalk ends in front of Fenwood, where it picks up on the water side. And we did a survey there, and we walked it out the other day. He's gonna put a price proposal back to me. And then we have to have some discussions with the state because that's a state road. So we are looking at that. We have 2 big DOT projects coming. Many of you may have heard about, one of them's a $3 million project. It's smaller. It's the repair of the Plum Bank River Bridge. Are
Right,
you familiar with this?
yeah,
George's.
yes.
Oh, that's right, you live right there.
Yeah.
That's right
So-
there.
But I actually got a note, I think it's the one that's further down by Tom's River.
I thought it was, I
No,
thought it
it's
was
the one
the
right
Plum
by
Bank
you.
River, Plum Bank, I thought. The
Okay.
first one they did.
Yeah,
Oh, the first one they
oh,
did
the
was,
first one,
well, the first one they did was actually,
that's the second one.
yeah,
Okay. I thought it was Plum, maybe I'm wrong then. I thought it was Plum Bank River. Anyway, there'll be a public hearing on that, I think, next week, next Thursday night.
Right,
It's a hybrid meeting. We're encouraging people to participate hybrid because this room's not big enough. And then that project will, I don't think it's obviously not this winter, it's for next winter. But they have to raise that bridge a little bit because when they repaired it lower than what it was, and they're not allowed to do that. The other project is in front of Fenwood. There's some,
yeah, it's the cement for the wall,
it's the groove underneath the wall is
Yeah.
being eaten away
Yeah.
by the water.
yeah,
And do you remember after, I don't know how many of you were here in 2012 or so, but that seawall was being undermined after Hurricane Sandy, Tropical Storm Sandy and Irene and Sandy. And they came in that winter and they did, I watched them that winter. I was like, what horrible work. And they were driving sheet pilings all winter and repairing the very bottom of the wall. This is, they figure, about a $20 million project that they'll
Wow.
be doing in the winter of 27, 28, I believe. It could be 28, 29, but 27, 28. There'll be a public hearing on that in November. Everybody within 500 feet of the project was notified. And that's another project that'll be, it's obviously a Labor Day to Memorial Day project. So those are some of the state projects going on. And we did settle a contract. We were in negotiations with the supervisors. That contract expired on June 30th of 2026. We had 2 or 3 meetings. I think just 2 meetings. We settled the contract. It's a 4-year contract. It began July 1 of 2 months ago. And the wage increases are 2.75, 2.75, 2.75, and 3 in the last year. It's a 4-year contract. Average wage increase 2.81, which I was pleased with. Not many changes other than that. There were a couple, but probably nothing overly substantive that this board needs to know. But the fiscal impact is that, so.
Are the others no under negotiation now? Is it, they're still like?
There's still
Dispatchers.
dispatchers. We're over a year, we're a year late on that already. We have a mediation scheduled in September. I don't know where it's going. It's the only contract, this is the longest contract I've never signed. I mean, it's just, I don't know what to say, but I don't wanna say too much publicly.
How many dispatchers do we have? How many
8.
people?
I think they're authorized for 9, but they have 8, 7 or 8 right now. Small, so it won't be a large impact regardless, but it's frustrating because we want to negotiate.
Carl, I have a question. You're talking about, the roads and sidewalks along that Maple, along the water. And all the water lines put in. And there's been water lines put in Norwood Beach on, I forget what, Woodland.
Yeah.
Is there,
That's all being paid this fall.
how much of it's being paid? I mean, that whole beach association.
Anywhere where they dug up, there's gonna be paid.
who's paving it, the town or Connecticut Water?
Well, what we do is Connecticut Water, if you let them pave it, they would pave half the road. But what we do is we say, okay, pay us per square foot for what that's gonna cost you. We'll take the money, we take the check, you've seen it before. We take that check and we do the road.
Even though some of it's a state road,
What?
some of it's a state road.
We're not doing, none of it's, we're not doing Maple Avenue.
Oh, okay,
We're
you're not doing Maple Ave.
54.
You do the side roads.
Yeah, it'll only be the side roads.
Okay.
Yes.
Cause
Yeah,
that
we
Maple,
won't-
that Maple Ave is terrible, it's so bumpy,
Yeah, we won't be doing
they
that.
did a terrible job.
Um, and we did walk the asphalt sidewalks the other day, Monday, let's say.
Tuesday,
Tuesday, yeah, yesterday morning, in front of Knollwood to take a look at actually making those asphalt sidewalks concrete. Because,
That would be nice.
yeah, we're gonna do that.
Yeah.
We're close to doing, it. Maybe in September and October this year, we're gonna do it.
That would be awesome, yeah, the traffic, just amazing,
no,
the walkers. Yeah, this one right here every morning.
Yeah,
yeah, but I'm on the other side, I'm on the water side, cause it's, you can't fall on that side.
No, that's what Carl talking about, the water side, right?
No.
Water side, we don't do
The
that.
house side,
We'll do the asphalt
the asphalt is on the house side,
on the north side, yeah.
Right, yes, okay.
Yes.
Got it.
where it's horrid.
I also, just as a side note, played a little 9 holes of golf yesterday at Fenwick with Joe Courtney, which was great. I was invited to play with the Borough Warden of Fenwick, who I've known for a very long time, and one other person. And they wanted to show him the lighthouse that they're acquiring very shortly,
Oh, yeah.
and kind of introduce that to him. And then we played 9 holes after. And I'm here to report that Joe Courtney has a darn good golf swing, been playing all his life. And he was pretty good. So it was fun. It's great. I mean, I've been here 15 years, so I know Joe Courtney. I've met him plenty of times, but it's always good to get FaceTime with the congressman. There's nothing that can hurt about that. And at the end of it, I asked him if he'd come back, and I'd like to show him a few projects around this town. Right, so he's just such a very approachable guy.
Was that the inner lighthouse you were looking at?
Yeah, well, that's one.
Are they ever gonna paint it? It's,
They,
it's so horrible looking,
yeah, they're working on it. They don't own it yet,
I know.
and that's fine.
Any questions for Carl? Kind of a question about the point. And so these designers, like about, are gonna come in and you're gonna interview one of the 6, you're gonna pick one of the 6 groups.
Yeah, we're gonna pick one of the 6.
But they're gonna design this whole area, right?
Yes.
Presumably, and so the sidewalk that we just approved going from, I mean, that would be part of the design process, right?
It will be.
Okay, so whatever it is, they'll just take that grant money and put it towards the whole design.
Yeah,
And then they may come in saying that this platform that you think about repairing may not be a good place for it and put it somewhere else.
I think along the water, there's gonna be a sidewalk.
Sure,
I mean,
yeah, I see, sure.
there has to be a sidewalk there, for people, and that is really what the grant wants.
That's true.
So, but what they may do is maybe they'll play with the design a little bit differently. Maybe it goes along the water and it also goes like this through the park. I don't know what they're gonna. There's a lot of firms very, very, I mean, it's a high profile project, and a lot of these firms are really excited, I know, to put this in their portfolio. I can tell you that for sure.
Yeah.
They really are.
I bet that'll be it.
Like national, I mean, like big time firms, and it's kind of cool.
Yeah.
And when you look at, I mean, not to go on that, but when you look at their similar projects that they put in their response to the proposal, I'm looking at some of the similar projects saying, our project's better than that, and and they know it's a great project. Connecticut River, Long Island Sound, high profile.
It's not very big money though.
It's not huge money. One of them estimated the cost of renovation between $1 and $2 million.
Right.
So you're right, it's not, but it's a neat project.
All right, sure.
It's a pretty good project.
Picture that, yeah.
And you see from the paper today, it said that Connecticut is #1 in the New England states for tourism, which I think is this the first year that Connecticut took over? Because I thought it was.
Yeah, so I don't know.
Anyway,
Nice.
I think that project is gonna be phenomenal.
Yeah, gotta get there.
Thank you, Carl.
Other comments? You do have a guest. Jessica, there's somebody named Jessica as a guest, I don't know what, oh, she just hung up.
Scared the hell
I
out
thought
of me.
maybe she'd wanna talk.
I see.
So,
Okay, coming from board members. Comes from me, Leanne, thank you so much. I don't know what else to say.
and welcome.
Yeah, well, of course, Sarah, please, welcome. Yeah. Thank you.
When we were talking bonds today, Sarah started talking with the financial advisor, a completely different language. But it wasn't English.
That's
I know that. It's like, what?
But to me, that wasn't English either. I lost him about page 4, like, okay, I'm done.
Surprised, you usually keep up with all those.
I did,
know,
I tried, I
I
really tried, and then Steve started asking questions, I go, okay, I'm done.
Let Steve take control.
All right, I need a motion to adjourn, please. Oh, wait, quick question for next few meetings,
Let's get our calendar.
we,
September 1st.
Yeah.
That's
at that point be,
First day.
yeah, you're first,
Labor Day,
yeah.
oh, that's before Labor Day, wow, Labor
That's
Day's
your
a little
first day,
late.
oh, very good, we're gonna dedicate that meeting to you.
Can we cancel it?
I mean, I don't know, I mean, we obviously.
I wouldn't cancel it right now.
No,
Fine,
don't
that's fine.
cancel it.
Let's just keep it, right, fine.
But I won't have my report ready till the 15th.
Of course not, yeah, but there's a lot of things going on.
Yeah,
around
there
that time, and so I think it would be good to have that. We'll keep the next meeting then, all right, very good, any motion to adjourn, please? Thank you, second,
Second.
in favor, with the ayes, aye.
All right.